Hey guys, what's going on? Welcome back to the channel. My name is Camilo from Trending Waves. I hope you guys are well. So what we're going to do here is we're going to review the SPY and the triple Qs, and we're going to do that by using our preferred method of technical analysis, which is what you see here in front of you, is the Elliott wave principle. So before we dive into the analysis, guys, subscribe to the channel, give this video a thumbs up as it helps the channel grow, and I do thank you in advance for that. Also, don't forget that tomorrow is the FOMC meeting between 2 and 3:30. So don't forget to tune in because it is a very, very, very important event. We've been tracking several counts, guys. We've been tracking several counts, and each video I show you variations of it because this market has been a very, very tricky one to track as of its high in January. Okay, but as time has gone by, we've been able to narrow it down as the pattern unfolds and develops itself. So for now, we are going to be under discount here, which suggests that we are in an ongoing wave 4, and we will potentially see for the downside coming into the rest of the week. Okay, or maybe not, but we're going to review that right now. So the wave 3 here completed in January of the primary degree. We then saw the minor degree wave 1, wave 2, 3, 4, and 5 to complete the wave A of intermediate degree, 3-wave pullback to the B, and now we are in this expanding triangle to complete the wave C of the intermediate and the wave 4. Okay, the way we're looking at this, guys, is that price action here might have been completed if we start seeing a break above this trend line and a break above the wave 4 previously here, okay, at 441. So what does that mean? That means that perhaps this is the wave C, wave 5, wave 5, wave C, and wave 4, which is appropriate, right? Because I've been telling you that we are going to come into completion for this wave 4 anywhere between the 38 and the 50%. But I don't think that's the case. I think this will be a very short wave C. We only see evidence of 3 waves. Okay, so for that reason, I am leaning more towards the potential wave B continuation here, which makes more sense, right? We will look at this as an A, B, and C, right? We have 3 waves here, and then we saw the pullback. So it is likely that we have evidence of 1, 2, and 3, and then we see price action fade. Now, where are these levels to keep our eyes open for so that we can see price action hit resistance? And for that, what we're going to do is we're going to take a retracement, and we're going to look at actually an extension rather, and we're going to look at an extension from the A to the B and down, sorry, from the A to the B, and we're going to look for a 786 and a 1-to-1 extension. Okay, so what does that lead us? That gives us a possible scenario of a 78.6 at 426 and 429. So this zone is a zone of interest for me to look for tomorrow in order for us to see a potential reversal coming into the rest of the week. And then we start seeing the fade into the wave C. Now, if this is the case, guys, wave C targets to the downside will come in anywhere between, let's take a quick look. We take an extension from the A to the B, all right, say if it was to the 100%, and we can delete this for now and hide this so we can make it more clear. We may be looking at a 4.9 to 4.4, okay, SPY, and that is an extension between this wave A to the B down to the C. Now, as I previously had before here, let's see if there was any levels of confluence, right, between the smaller degree wave structure to its higher degree counterpart. So by doing so, we're going to look at another extension from the 2 to the 3 to the 4, all right, and we're going to turn on the 100% extension because in the expanding triangle we should be able to see quality of wave 3 and wave 5, and I'm going to show you that in a minute. So wave 3 should equal to wave 5. So as you can see here, we start seeing levels of confluence here stacking up between 2 levels of degree. So the blue one, which is the minor degree, and the orange one, which is the minute degree. Okay, so these 2 zones, 4.05 and 4.4, should be our downside targets for the remainder of the week, if not the following week, guys. So we should be able to see price action come down a bit further should these zones hold. All right, guys. So over to the Qs. The Qs is displaying the similar situation, but please excuse me. I'm having a hard time thinking that maybe this is an ongoing B wave, and I'll show you why. Because if this is an ongoing B wave, we're obviously going to see a running on expanding flat, right? Because we broke the low here, and now we should see a break above this high. Okay, maybe that's the case, but I'm having a hard time. I'm thinking the scenario is that we might have bottomed already. We might have seen this whole structures come into play because we've hit a 618% retracement of this overall wave decline, okay, at 318.36, and we saw a positive reaction out of that zone. So let's dive down to this area here and let's take a look at the price structure. So for that, let's take a look at the 1 hour, at the 15-minute time frame. So out of our wave 4, we see the wave A, right? We see a potential B wave, okay? And now we may be looking for a C wave decline. So we have the 1, 2, 3, 4, and 5. Okay, that's one way of looking at this, guys. Okay, one way of looking at this. And if we want to start invalidating this wave structure here, then wave 2 should go beyond the wave B. Okay, then that's going to invalidate this structure. Another way to look at this, guys, is that we delete this and this is an ongoing B wave. If we invalidate it, then that's what the count will look like. Okay, so that would mean that this is the A, this is the B, and then we're going to get the C. And where would that land us? Let's take a quick look at a retracement. You know, just the same exercise that we did for the SPY. We're going to look at the 1272 this time, okay, and the 100%, and the not the 1618, the 100%. Okay, so anything between this zone, let me delete this here. Between, let me highlight this for us. Anything between the 339 and 334 should be a resistance zone if this is the ABC expanded flat that we're looking for us to find rejection and head on lower. Okay, guys, otherwise, it's pretty simple. If we start seeing evidence of a 5 wave to the upside, okay, then a pullback to hold support, and then again another upside, which will then break this high. Okay, that's key. All right, that's key, because if we keep on going higher and we break above the wave 4, then it is maybe clear that we found our bottom. All right, and what's throwing me off about this is that we can also see 5 waves here. All right, we can see a 1, 2, 3, 4, and 5. Nothing overlaps. Everything is clear. Wave 2 does not go beyond the wave 1. Wave 4 does not overlap into the wave 1. And wave 5 and wave 3 is beyond the 100% extension. Okay. As you can see here, it's at the 1272, and then we bounced. So there are guidelines that are being met here for this to be counted as a 5-wave progression, thus suggesting that maybe this is the wave C, all right, and this is the wave B, and this is the wave 5 and of CF4, and so on. If that's the case, then what we need to look for is a break above this zone. Okay, we need to see the 1, 2, 3, 4, and 5 complete here, wave 1, 3-wave pullback to 2, and then we go to take out this area. Okay, that's what I want to see if that's the case. Otherwise, just remember these scenarios that I just mentioned, these scenarios that I just outlined. We will look for the, let me just undo all of this here, which is the likely case, right? Because we see that the SPY may be heading on lower too. So we have the ABC, all right, and then we get lower. All right, guys, so that was a quick one for me tonight. I hope you guys are clear on this. I may not have a video tomorrow or Thursday. I think we'll let you know, but thank you so much for tuning in. I'll see you guys tomorrow, and good luck with the FOMC meeting. Take care. Bye.